Hello everyone, welcome to the Alpha Hustle. This is a weekly review of Nifty on how market auctioned this week with important references and potential scenarios that may likely to play out next week. Let's quickly get started. Let's start with a review of Nifty. To understand what different time frames are doing, we'll do a top-down approach, starting with monthly, followed by weekly, and eventually getting down to the daily charts. On the monthly, one time framing to the upside is still intact. Market left a 1,000-point selling tail last month where buyers are trying to absorb the supply during the last week. Trend for the longer term time frame is still on the upside. On the weekly, one time framing to the upside was stopped during the prior week. However, there was no continuation to the one time framing to the downside yet during the last week. So we have a 2 week balance as a reference to carry forward. Volumes are above par for the last 2 weeks, suggesting that the position built up by the intermediate term time frame money. We may get more clues if it were the buyers or the sellers building the positions once the market attempts to start an imbalance move out of this balance. On the daily charts, market is pretty much balancing within a broader range. Higher prices towards 15,300, 15,500 is bringing in supply, while the lower prices towards 14,500 and 14,600 is bringing in the demand. Market had a nice markup phase since November last year. So after the markup phase, market is trying to balance within this broader range for over a month now. Is this a potential distribution or reaccumulation, which is to be seen? Clearly, there is presence of supply in this zone that's being absorbed by the buyers. If the buyers were successful, we are going to have a fresh markup phase towards 16,000. If this turns out to be a distribution, we may have a markdown phase with change in structure below 14,400. The longer the market balances in this zone, the stronger it gets for the imbalance move. Spike in cumulative OI for the last 2 trading sessions suggests that the shorts being built up with weekly closing below the HVN of 15,000 and 15,100. Are these strong hand sellers that can drive the market further down next week is to be seen. The zone of 21 DMA and 50 DMA is getting prominent. All breaks into this zone are getting bought into. This is getting quite predictable and mechanical in nature. If market were to break 14,600, this potentially may result in change in the structure in the very short term. Zone of 14,400, 14,600 that acted as a strong resistance back in Jan now turned into a strong demand zone. This HVN marks an important swing pivot. Breaking down below this zone means that we are heading for a structural change. Now let's get into market profile charts to understand how markets auctioned this week. Market opened within the range and the value area of 26 Feb, where sellers failed to get a follow through to prior day's liquidation. Therefore, a higher open on the 2nd of March stopped the auction to the downside and started the auction to the upside. Market had a trend day on 3rd of March with no follow through yet again, with a gap down open on the subsequent day, starting one time framing to the downside. However, market was just shopping around within the broader 1,000-point range of 14,500 and 15,500. What market tried to do on Friday was to balance within the thinly traded gap zone of 15,000. Important references and potential scenarios that may likely to play out next week. Scenario 1, follow through to Friday's low is likely to head for a retest of demand within 14,500 and 14,600 HVN zone. Any acceptance into this zone may head for clearing of the gap that was left at 14,400 and 14,480. Scenario 2, stopping off one time framing down and acceptance back above 15,100 may likely to head for a retest of weekly high left at 15,320, followed by the highs of 15,430 and eventually the free highs left at 15,520 levels on the 24th of Feb. In terms of open interest, clearly the sellers are more aggressive when it comes to writing the options, whereas the put writers are trying to build a base, however, not as aggressive as the sellers. So in short, the path of least resistance is to the downside. That's all for today in terms of review of Nifty. Thanks a lot for joining and listening. If you find this content useful, please do like, share, and subscribe. Thank you very much.